Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, October 24, 2025, and here is everything you need to know as the markets close for today. Markets took a step back today after riding a 6-session winning streak. The Sensex closed down 345 points, declining 0.41% to land at 84,211. The Nifty 50 settled at 25,795, slipping 96 points or 0.37%. Bank Nifty tracked the broader weakness, closing lower at 57,868. The overall sentiment turned cautious as traders booked profits following reports that the US is considering a fresh probe into China's compliance with their 2020 trade deal. This triggered profit-taking across sectors. Additionally, Commerce Minister Piyush Goyal's statement that India will not rush into trade agreements with restrictive terms dampened hopes for an early India-US pact. On the currency front, the Indian Rupee remained resilient, closing near a 2-month high at 87.85 against the US dollar, showing strength despite broader market headwinds. On the positive side, the Nifty Metal index led gains, rising 1.03% as base metal prices strengthened. Hindalco, Tata Steel and other metal stocks rallied on commodity upside. Bharti Airtel climbed higher on the back of telecom sector strength, while ICICI Bank and ONGC also posted solid gains. In contrast, Hindustan Unilever led losses on the Sensex, followed by Adani Ports and UltraTech Cement, each declining significantly. Cipla and Max Healthcare also faced selling pressure. In terms of notables, Motilal Oswal Financial Services has had an exceptional run this month, surging 17% in October alone and hitting record highs. Vodafone Idea regained its 1 trillion rupee market cap after strategic recovery. Shipping Corporation of India surged 7% during the day and has zoomed 16% over the past 2 trading days following strong results. Meanwhile, ITC Hotels released strong Q2 results, with net profit jumping 74% year-on-year to 133 crore, yet shares slipped on profit-taking post-earnings. For traders watching Nifty 50, the critical support level of 25,700 held during today's weakness. Resistance is placed at 25,850. A break above this level could signal a rally towards 26,000 to 26,200. For Bank Nifty, immediate support sits at 57,900, with stronger demand expected near 56,500 to 57,000 levels. Resistance is around 58,200 to 58,400. Short-term volatility is expected, but the charts suggest further consolidation over the next session or two. Metals emerged as the star performer today, with Nifty Metal climbing over 1% on commodity tailwinds. Oil and gas also showed resilience with modest gains. On the flip side, the PSU Bank index was the weakest performer, down 0.74%, followed by FMCG, which declined 0.75% as consumer staples faced profit selling. Pharma and private banks also underperformed, each dipping around 0.5 to 1%. Midcap and smallcap indices lagged the benchmarks, with Nifty Midcap 100 down 0.24% and Nifty Smallcap 100 falling 0.21%. On the macro front, the broader market sentiment is being shaped by global trade tensions and potential US-China escalations. Domestically, Commerce Minister Piyush Goyal's cautious stance on India-US trade negotiations signaled that New Delhi will not compromise on strategic priorities. No major RBI or SEBI announcements were released today that significantly moved markets. The focus remains on global geopolitical developments and their impact on commodity prices and capital flows. Gold weakened today, slipping sharply as the precious metal corrected from recent highs. MCX gold futures were trading at 1,22,128 rupees per 10 grams, down nearly 2,000 rupees from yesterday. Silver also retreated, losing momentum after its recent rebound, trading around 1,45,760 rupees per kilogram on MCX. Both precious metals faced selling pressure despite broader economic uncertainties, though gold continues to hold a positive long-term outlook. Crude oil continued to benefit from fresh US sanctions against Russian producers, with Brent crude trading around $66 per barrel and WTI around $62 per barrel, each inching higher on supply concerns. These elevated oil prices continue to weigh on sentiment domestically. The major market mover today was the announcement of fresh US sanctions on Russian oil majors Rosneft and Lukoil, which together account for nearly half of Russia's oil exports. This sparked immediate supply concerns globally. Reports emerged that Chinese state-owned oil firms have halted seaborne Russian crude purchases, while Indian refiners plan sharp import cuts to comply with US measures. The European Union simultaneously imposed new sanctions targeting Russia's energy infrastructure. These geopolitical tensions boosted oil prices and created uncertainty around energy supplies, which in turn supported commodity stocks but dented overall market risk appetite. From a technical standpoint, Nifty 50 remains volatile but holding above the critical support zone of 25,700 to 25,750. As long as these levels hold, traders can expect potential for a rally towards 26,000 to 26,200. However, if support breaks decisively, the index could retest 25,500. For Bank Nifty, the index is expected to consolidate with a positive bias, trading in the range of 57,700 to 58,400. The oscillators suggest consolidation with mixed signals, so expect sideways to range-bound movement tomorrow. Any break above resistance could trigger fresh momentum, but near-term traders should exercise caution and look for confirmed breakouts. Here's the key takeaway for traders. The profit booking after 6 consecutive up days is normal, and today's dip is not a reason to panic. If you're looking to build positions, wait for Nifty to hold above 25,700 and find support near 25,600. Metal stocks continue to look strong on commodity strength, so selective buying in quality names remains an option. On the flip side, if you're already invested and profits are substantial, consider protecting your gains with a trailing stop-loss strategy. Don't try to catch every move. Wait for confirmation. We'd love to hear from you. Send in your questions and market observations to our social media channels, and do tune in tomorrow morning for our Market Open wrap-up. Stay tuned for tomorrow morning's wrap, and send in your questions. This has been Prem, and we'll see you next session. Have a great evening.